Welcome to Briefings in Global Affairs, International Relations, and Geopolitics. This hour in focus, BRICS 2023 Summit to see Saudi Arabia endorse creation of Petrol BRICS deal in de-dollarization escalation. Let's explore this in more detail. Accordingly, Europe has had a new reserve currency every 100 years for 500 years. Portugal, Holland, France, and England all colonized. Wars and societal upheaval sometimes accompanied monetary changes. In the 20th century, the US dollar ruled the world. History implies the dollar cycle is ending. Asia challenges again. China is developing an alternative monetary system to split the global financial system. China has strong allies. 41% of the world's population lives in BRICS countries. The De-dollarization coalition is bypassing the dollar using currency exchanges. A BRICS settlement currency based on a basket of participating currencies may be next. De-dollarization goes beyond BRICS. African, Latin American, and Middle Eastern nations may participate. Saudi Arabia is considering joining BRICS. The Saudis and US created the petrodollar 50 years ago. They might create a Petro BRICS currency this time. OPEC nations may follow, repricing the $7 trillion oil market. Despite decades of global warming warnings and billions of dollars in green technologies, fossil fuel addiction persists. Oil's black gold moniker is justified. Oil consumption determines a nation's wealth. A 42-use gallon, 159-liter barrel of oil, which costs less than $100, compresses 25,000 man-hours of labor. Before the Industrial Revolution, 12 people worked a year. Diesel fuel runs the worldwide supply chain. China, India, Russia, and Saudi Arabia make up BRICS, the world's major energy buyers and producers. BRICS would dominate oil and other commodities, including wheat, fertilizer, industrial metals, uranium, and gold if candidate members were recruited. BRICS nations have various reasons to reduce dollar dependence. Since oil is traded in dollars, the US is a virtual toll booth for the global oil market and most other commodities. The US also dominates the global economy. The dollar rises versus other currencies as the US Federal Reserve raises interest rates, making oil and other imports more expensive. Countries and companies with dollar-denominated debts pay more in their currency to repay their debt. Dollar depreciation worries BRICS nations too. Money printing during the 2008 financial crisis and 2020 COVID crisis contributed trillions to U.S. debt. Since 1971, when the U.S. dissociated the dollar from gold, its value has dropped 70%. BRICS members are swapping currencies to avoid the dollar. Next may be a basket-based payment system. Each currency's weight would be proportional to participating countries' GDP, international trade, population, territory, natural resources, and commodities, including gold. The BRICS nations haven't revealed the new system's architecture, although China's central bank digital currency, CBDC, could be a blueprint. No gold, oil, the partially overlapping Eurasian Economic Union, EAEU, and Shanghai Cooperation Association, SCO, would add more than half of the world's population and most of its commodities to the BRICS currency. The BRICS currency might revalue energy, commodities, and gold. BRICS nations prioritize a parallel international financial system. It would better protect participating countries from Western sanctions and serve as a backup for the worst-case scenario. The implosion of the global dollar system, burdened by $300 trillion in unsustainable debt, most of it denominated in dollars and other Group of 7 currencies. Europe was poised to work with BRICS before the Ukraine crisis. European policymakers suddenly shut off Russian energy before finding alternatives, eliminating that prospect. European standards of living will plummet if the EU loses Russia's vast riches. Germany risked its corporate model, Wirtschaftswunder, and European economy. Last month, macroeconomist Luke Groman concluded that the leadership of Europe has been compromised in some way, that they are acting against the interest of Europe. The self-absorbed EU leadership may not comprehend macroeconomics. The EU may collapse between Eurasia and North America. Economic growth, default, higher taxes, austerity, debt relief, and inflation are the 6 choices macroeconomist Jan Nieuwenhuis suggests for over-indebted nations. The last of these 6 is now rampant, jeopardizing millions of people's pensions and living standards, and possibly causing civil instability. Nieuwenhuis believes lower-income individuals revolt when they can't make ends meet. Social instability causes political instability, monetary instability, and greater social instability. This doom loop is visible in many countries, including the U.S. Central bankers are publicly discussing revaluing their gold stockpiles to support their currencies and balance sheets. Most central banks hold gold at $35 per ounce, the same price as in 1971 when the U.S. decoupled the dollar from gold. After 50 years, the dollar has depreciated to $1,800. London gold traders say central banks are buying more. They bought 400 metric tons of gold in the third quarter, the most since 1967. Institutional and commercial banks also bought gold. Gold is a hedge against currency collapse, not an investment. Gold buyers fear a financial meltdown and monetary reset. They expect gold to replace the dollar as the reset benchmark. In times of crisis, gold has been valued worldwide. Asia and bankers have long respected it. A bank will accept a kilogram of gold or silver as security for a loan. That's where we wrap things up for the time being. Thanks for watching. See you in the next video.